let me just ask you, how your view of the impact has developed, because certainly the market has taken this virus more and more seriously over, say, the last 6 trading sessions than it did last month.
Well, listen, a couple of weeks ago, when we issued our statement, we decided to be extremely transparent in terms of the assumptions we took into account for our business model and therefore for our new revised guidance. These were pure assumptions. They are assumptions. They're not market predictions. We don't know what is really going to happen. But we gave enough information to the markets for them to update their models as things develop. And that's what we decided to do, given that we don't know what tomorrow is made of.
So what is the main concern in terms of your drinks? It's not the Ricard pastis that your grandfather invented, 70, 90 years ago. What's the main beverage lines that are hit?
Well, since so far, of course, and based on the assumptions we took, China is our second largest market, and it's mainly our Martell Cognac and our Chivas Scotch whiskey to start with. And our assumption there is a gradual recovery starting during the month of March to get back to somewhat of a normal situation in June, obviously excluding the Hubei province. And second, and that's our third largest market, if it were a market, global travel retail, obviously with Chinese passengers that have dropped quite significantly. We're assuming, again, a gradual recovery starting probably in April to reach something normal by June.
Alexandre, good morning. Do you see then, you mentioned their recovery outside of Hubei province. You mentioned recovery in the month of March. Do you see signs of that coming yet? Because we heard yesterday some specifics from Diageo about bars being closed, restaurants being closed, about nightlife grinding to a halt. Do you see signs that things are going to be different in March? Because we're close to March now.
Yeah, we're close to March, but for the month of February, we assumed everything would be closed, which is the case, by the way. So we'll see what happens. These things change on a really daily basis. I think what is important for us is to be fully transparent with the markets, and first and foremost, health and safety for our employees. So we've taken a number of clear measures internally, not just in Asia, but globally. And second, to stay ruthlessly committed to deliver our strategic plan. At the end of the day, we need to remain focused on our business as well. And the good thing about Pernod Ricard is that we're very diversified, both geographically, to start with, Europe, America, and Asia, and as well in terms of brands.
Yeah.
I was talking about Martell and Chivas, but we have, 13 strategic brands.
A lot of brands and a lot of locations. But as we see the global spread, so
Yes.
China was the focus, then South Korea has become something of a focus. Italy in Europe is now a focus. As you see that global spread, how are you tackling this internally as a business? I mean, do you set up special teams to deal with it? Do you just have to respond in each country as it comes up? I mean, how do you set about game planning what you do? Well,
from a pure health and safety point of view, absolutely. That's something we have put in place. Obviously, we have some strict rules internally. We also follow local authorities' guidelines ruthlessly. But then, from a purely business point of view, we're still working on delivering our strategic plan, which has nothing to do with the COVID-19, of course.
Okay.
What are you, outside of, and speaking of that strategic plan, outside of the coronavirus, what do you see as the revenue streams and profitability of your drinks in 2020?
So we're in year 2 of our 3-year strategic plan, Transform and Accelerate, and what we are seeing is continued diversification of our sources of growth. So all regions are growing, all sub-regions are growing, our strategic international brands are growing, our local strategic brands are growing, our specialty brands are growing, our wine business is stabilizing based on a value strategy. Our pricing for the second year in a row is pretty good, strong, at 2% pricing. So far, the plan is delivering as expected. Of course, there's the current situation, But putting that situation aside, the plan is fully delivering as expected.
And what about one of your newer shareholders, Elliott Management, of course, taking a stake in the business?
Yes.
What meetings have you had? What are they asking for?
Well, first of all, they're not new anymore. They've been here for over a year now, and as we do with our other investors, we have ongoing discussions on a regular basis. Just as we do with our key other investors.
Are they asking for anything different to other investors?
No, overall, what our investors want to see is a well-run business, continued expansion of our margin, of course, which we are delivering. But at the end of the day, Pernod Ricard is a story of top-line growth. And the fact that we are today, for a second year in a row, growing literally everywhere in terms of regions, in terms of brands, is a good testimony to the successful development of our strategic plan.
Alexandre, what about M&A? Are there any brands out there that you think you could pick up and get at a good price right now? I mean, if I look around at your competitors, at Rémy Cointreau, at wherever it is, Diageo, Heineken, all of the distillers and brewers have really dropped over the past few weeks and months. Does that create an opportunity for you?
Listen, we have been quite busy in terms of bolt-on acquisitions over the last 12 months. We made a series of partnerships and/or acquisitions with the like of Malfy Gin, with the like of Rabbit Hole Bourbon, with the like of TX Texas Whiskey, with the likes of Jefferson's Bourbon. You should expect to see us continue to be quite active on that front. At the same time, we try to continue to dispose of assets which no longer fit our strategy.